I'm Priscilla Barrera with the Investing News Network, and here with me today is Howard Klein of RK Equity. Howard, thank you so much for joining me today.
Thanks for having me back, Priscilla. It's been a little while.
Yes, and we are here at the Fastmarkets Lithium Supply Conference, where you gave a presentation about the lithium market, and you mentioned your first Fastmarkets lithium event you attended was in 2016. To start, I wanted to ask you, how have you seen the themes at these conferences change when it comes to lithium supply-demand dynamics, and what challenges remain the same for the industry?
Well, 2016, my presentation went back to 2009 when I started in this industry. When I was representing for the first 7 years until 2016, I only represented what is now, the Thacker Pass project. So, but I never really knew about this conference, or was aware of it, but never attended. But in 2016, lithium prices had started to rise in late 2015, and by 2016, there were some Australian companies that were doing well. And like Pilbara had just started, Orocobre, the Lithium 1.0 vintage companies like Orocobre. I think Galaxy, I don't know if it was just emerging from bankruptcy then, but I was a bit ahead of my time from a SPAC, a special purpose acquisition company, had hired us to, because I saw it was a gold. Top Kaplan was kind of focused on gold. Gold was kind of quiet. And lithium was hot, and SPACs generally need something that's hot to kind of transact. And as a result of work we had done, Lithium Americas had at that time merged with Western Lithium, and they had attracted SQM as an investor at the time. And it was game on. Macri had just been elected in Argentina. There was a major rush into Argentina. So you're asking about like the change. There was like Argentina, you're Argentine, right? So Argentina was crazy hot and interesting and attracted some capital, a fair bit of capital and new startups in 2016. So I was here, I'm just trying to remember back then, I introduced that SPAC, and that's how I met people like Ken Brinsden at Pilbara, Peter Secker at Bacanora, Guy Barassa at Nemaska, and they were all very interested to hear about, a billionaire investor that had a $200 million kind of U.S. listed vehicle to respectively, capitalize their companies. But Electrum were gold guys, and they never fundamentally got comfortable with lithium. So they kept looking at all these deals, and then they couldn't get comfortable with the supply and demand. Lithium is just very different than base metals. So that's still true of a lot of kind of gold investors, base metals investors. So there's been a lot of evolution. I mean, Argentina has been hot, then less hot, although a lot of those 2016 and 2017 kind of exploration companies ended up getting sold in 2021 at reasonably high valuations. So I mentioned that in my presentation, that Rio Tinto bought Rincon, Ganfeng bought Lithia, LAC bought Millennial, and Neo bought by Zizhen, at reasonably high prices. So it just shows you that, like, if you could raise capital, find, explore, advance projects to PFS, DFS, there's a lot. Argentina is going to be a major supply source for lithium. It just takes like a really, really, really long time in brine. So that's changed a bit. There's not like people recognize that South American brines take a long time. There were also, no one was talking about DLE in 2016. They were talking about DLE a lot in like 2021, 2022. They're still talking about it a bit here, but maybe a little bit less so. They're talking a lot about Canada, and they're talking a lot about localized supply chains. So we were talking about that back in 2016, that it's coming. And we were representing Piedmont Lithium. Piedmont Lithium had just started in 2016, and we had raised seed capital for them, a 10 or 15 million market cap. But it took many, many years until like Tesla kind of, plucked them out of obscurity in 2020. So 4 years later. But the whole concept of short distances and not being wholly reliant on China, and especially for auto markets of the world. So America is the second biggest market, China is the first biggest market, but Europe is a a very big, domestic market. So you can't just be moving product all around constantly. So that was talked about, but no one was like kind of really paying attention to it. The 2016, 2017, 2018, it was mostly kind of, Western Australian spodumene that was being sold to China. And those were the success stories. And those still today are a major source of supply. But now you're seeing with the IRA and other legislation that's been passed in the U.S., Europe's slower, but they are paying attention. They have passed the critical minerals law, et cetera. They're not talking so much about Europe here at this conference. I haven't seen that much, but this is a U.S. conference. It's in Las Vegas, so it is attracting more of a North American, bent to it. But I think that answers the question.
Definitely. Let's just talk specifically about what's been happening in 2023. What trends do you expect to see for the rest of the year in the lithium space? And are there any particular catalysts that you're watching out for?
Well, 2023, in the presentation I gave, is the year that the auto OEMs, also the incumbent lithium producers, have started to get very serious. So on the incumbent producer side, Albemarle is bidding $3.5 billion for Liontown, a pre-producing company. That's a very large number, $3.5 billion. I mean, Albemarle bought Rockwood in 2015 for $6.2 billion. That was a producing lithium company and had many other assets in it. So $3.5 billion is a real number, and Liontown has rejected it, and there are other bidders, for it. So that's serious. And then Allchem and Livent have agreed to merge, right? The number 6 and the number 4 producer into the number 3 producer. So they're basically saying our customers, auto OEMs, battery, they want companies that are well capitalized, have multiple assets, multiple products at scale. They don't want to be interacting just with one project company juniors, but they have to participate in some of the juniors as well. So the other trend that we're seeing is you're seeing auto OEMs take matters into their own hands and write reasonable checks. So GM writing a $650 million check into Lithium Americas they're getting into mining, essentially, right? But they're not directly getting into mining, but the fact that they're going to own 19.9% of the parent company, and that company is mining and processing chemicals, that's meaningful, and that's a reasonable check. Ford just announced 5 deals with Albemarle, SQM, Compass, Energy Source, and ASCA, through Livent. So largely those were good deals with incumbents. So Albemarle, SQM, Livent, Nemaska, those are incumbents. And then they made some DLE bets with Compass, which is a reasonable company, and Energy Source, which is among the most advanced DLE providers in the Salton Sea. So those were good deals. Those are important deals. And then Tesla is building their own hydroxide facility in Texas. So they're spending a reasonable amount of money on a 40 to 50,000 ton hydroxide facility. So they get the shortage thesis. They now, after many, many, many years of all of us kind of saying, it's coming, it's coming, it's coming, it's kind of sinking in, but it's still not fast enough, right? But so what's going to happen in the second half of the year? You're going to have more of that. I thought it would happen a lot faster after we saw some of these early deals in January. Another deal was like LG Chem wrote a $75 million check into Piedmont. But what happened was that the lithium price started going down, right? And whenever the lithium price is going down, right, the negotiations happen and things slow down, right? They think they're going to get a better deal. So there's a bit of cat and mouse happening. The lithium price, we thought, would kind of bottom and then bounce. In May, it has. We're now in kind of like a summer lull. We're at this Fastmarkets conference. This is like, there's 1,100 people here. Last year there was 650, and before COVID they were typically getting like 400 or 500. So this is like double the normal. And this conference is very much an industry conference. It's always been where Japanese, Korean, Chinese OEMs meet with and negotiate deals with the incumbent producers. So that's all happening on the sidelines of this conference. And everyone's kind of like taking stock. Look, where's the price? It's cat and mouse, but I think there's been some seasonality to lithium equity performance over the December to the January period, which happened kind of last year also. It's happened many other years, is a period of time where you have rallies, and the sell in May, go away kind of mentality has played out over time in lithium. And so that's kind of what I feel. And I've said it many, many times. buy the dip and then, you'll reach all-time higher love. But that's not the case necessarily across the board. It is a stock picker's market. There are examples like the DLE. The DLE experienced a bubble of hype and enthusiasm, and valuations kind of got very high. A lot of the DLE stories are making progress, but it's now in kind of execution mode. And there's this Pierre Lassonde curve that's traditional in mining, where that shows like you make money, in the early stage exploration and as you're going into production. But like in that interim period, which could be 4, 5, 6 years, where you go to feasibility, pre-feasibility, definitive capital, get permitted, stocks typically kind of languish during that period before they rise again. So a lot of the DLE stories, are falling in that, and some other advanced development stories are experiencing that. But at the same time, you've had like Sigma, and you've had Core Lithium, Rose as they're going into production. Piedmont, we think, should follow that trajectory, as with Sayona, they are getting into production. But you've had a phenomenon where there's a lot of new companies kind of coming, and exploration stories like Patriot and Winsome, and there are a few others that are just like defining a resource. And there's a lot of like retail speculation kind of going in, like, how big is the resource going to be? What's the appropriate valuation for it? So there's a lot of opportunities there. But some of that is even kind of like tapered off. Like there has a number of those stocks have flatlined or fallen in this kind of sell in May, go away, or the weak, spot price phenomenon. The equity market sentiment is very correlated to where the spot carbonate price is. It has recovered. It's now kind of stabilizing. Let's see how it goes. But we're confident for everything my partner Rodney looks at and other data points. Some traders that I've spoken to here, they're quite optimistic. The market's quite tight. You did have some inventory, destocking. China just passed, subsidies again today. That's very positive for the market. So quite soon you're going to see sustained lithium price rises, and then people are going to say, okay, and they're going to pile back into lithium equities. But I think it's important to be selective. There are stock picker market.
And, when we look at lithium demand forecasts, the number seems to keep going up. We've been saying this for a while. Supply to meet that demand is still to be seen. I wanted to ask you if there were any particular regions or projects looking to bring new supply online that caught your attention in the past year, and why?
We've been very focused on what I call the North American Lithium Triangle. Okay, so that's from Carolina to Quebec to Ontario, spodumene, and Quebec is now, after a lot of failures. I mentioned this in my presentation. I always compared rocking in the free world, Nemaska, using a Neil Young metaphor, and in Lithium 1.0 and Lithium 2.0, Quebec has just had a lot of failures. But hey, rock and roll is here to stay in Quebec. So with Sayona and Piedmont going to have their first shipments imminently, right, and first revenues, that's putting Quebec back on the map. The Allchem Livent merger, Nemaska is permitted. Okay, that will go into final investment decision and construction over time. They just signed a deal with Ford. And then James Bay from Allchem. I think Livent is going to be well positioned to be a consolidator and a big player. I've compared Quebec to lithium to aluminum, right? So you have Rio Tinto and Alcoa have, I think, 3 million tons of aluminum are produced, and I think 1.5 million tons of alumina are produced in Quebec, taking advantage of low-cost hydro, over the course of like 10 or 12 different aluminum smelters and one alumina refinery. So I think you're going to have maybe 5 or 10 lithium hydroxide, lithium carbonate plants in Quebec, but also in Ontario, also in Carolina, and both North and South Carolina. Albemarle is building a $1.5 billion, Megaflex facility in South. So you're going to see, and then you have Tesla in Corpus Christi in Texas. So like Quebec, so northeastern and southeastern, North America are going to be, hydroxide hubs from spodumene. So that's caught my attention. That's caught my attention for the past 10 years, but now it's finally kind of coming into fruition. Africa as a destination, I think, is also relevant. You got Leo Lithium and I think Atlantic Lithium, and there's some stuff in like private, or the Chinese are involved in Zimbabwe and elsewhere. But I just think Leo Lithium stock price rise, and Atlantic has not risen, but I think that's kind of like not well understood. Brazil is another good spodumene area with Sigma, and there's a few other companies like Latin Resources and Lithium Ionic and Atlas, which have kind of appeared. So I just think like we're very focused on hard rock more than others. We like E3 Lithium, as a DLE play, or relatively undervalued DLE play, but DLE is still harder. South American brines still harder, right? Political risk is, makes those companies have, trade at lower valuations, right? So we're focused on ex-China supply for ex-China demand. And, ideally you'd like to find the companies that could get, premium pricing for their product, but also premium valuations. And we think hard rock in good jurisdictions is the way to go. So all those regions that I mentioned, and then let's not forget Australia. There's companies like Global Lithium. Rodney put together a chart. There's only 14 JORC-compliant resources in Australia. The vast majority of them are already integrated with majors, right? So Albemarle and MinRes, or SQM, West Farmers. So there's not a lot of available spodumene supply. So a company like Global Lithium that has all of its offtake, available. With their two assets, I think they're close to 50 million tons. So that's always going to be a good jurisdiction. And, their exploration company. There's a lot of Australians in Canada. And the reason they're coming to Canada is because they think it's underexplored and undervalued. And in part, Western Australia may be more competitive, or maybe some of the assets have already been found. But I think there's more to be found in Western Australia. But so those are all the regions. So hard rock matters. These are the regions. I won't rule out DLE. There's some interesting stories. Like we'll see the Salton Sea, but there's just that story has been hyped. It's show me time. And a lot's kind of come back to, just conventional, plain vanilla. We've been talking about it for a long time. Keep it simple, stupid. Keep it spodumene, stupid.
So for the investor audience that might be listening to us today, how would you suggest an investor to cut through the noise when looking at a company developing a lithium project? What do you consider to be red flags in the current market?
Look, there's a lot. To want to cut through the noise, watch Rockstock Channel and read Investing News Network and everything that Priscilla Barrera writes and interviews. So that's one area. The RK Equity Lithium scoreboard has grown to over 100 companies. And every month I found a bunch here. There are just people that listened to my presentation I hadn't heard of. They said, could you put me on the scoreboard? And I'm a 50 million market cap with some exploration properties in Canada. I'm like, oh my, how many more of these are there? So while we are in a structural shortage for lithium as far as the eye can see, there is definitely an oversupply of lithium investment opportunities. So you have to be careful. You can't just look at the scoreboard and throw darts and everything's going to go up. There's going to be things that are fly-by-nights, right? Or, so you always look at the cash that a company has. Look at, do the marketing materials seem real, or do they look very over promotional, right? So there's a lot of, again, you have to be reasonably, I don't know, there's lots of greater fools out there. And so what are specific red flags? I mean, you can get pretty technical. There are companies that just say, oh, we're close to XYZ company, or, here, I'm this tiny company and I'm comparing myself to Albemarle, right? Those are over promotional kind of tactics, or if just something doesn't smell right in the way that they're presenting themselves, be careful. Or if you've never really heard of the company, and what's the source of the company being introduced to you, right? So oh, I heard about this on social media because XYZ person did. Like, just follow. There have been people who have been following the space like a long time, including myself and Rodney, but others who, if you're a retail investor, that, go on Twitter, go on LinkedIn, find people who are intelligent. They're not afraid to kind of like show who they are, and listen to what they're saying and what are they, and if these credible people are not talking about a company that is coming to your attention, that could be a red flag, right? So like you ask why is nobody else talking about, like, why, so those are things I'd suggest.
Yesterday, we heard lithium producers mention how legislation such as the US Inflation Reduction Act and the EU Critical Minerals Act have been positive for the industry. Do you agree? And what do you think is still needed from governments when it comes to supporting this build-out of resilient supply chains?
The Inflation Reduction Act and Joe Manchin, cutting a deal after holding out for a long time in August of last year, it has an absolute game changer. I said it as soon as Biden was elected. We published a video and an article like "The Sleeping Giant Awakes," and then I've been talking about the big money Biden, and I call it the Battery Metals Inflation Act, okay? Because they've just put, it's not just subsidies, for consumers. It's tax credits for producers, and it's local content requirements that in order to get the subsidies, you have to produce them in America or with free trade agreement countries. So it is, America has joined the battery arms race in a very substantial way. It's not still fully, but it's happening. I mean, if you look at, Albemarle had some slide which showed how much new investment has been announced and is being implemented in August as a result of that. It's very, very meaningful. So Europe's slower. Europe talks a lot, right? But Europe is also an amalgamation of 27 countries. So the EU can't just force each individual country to change their domestic legislation. So it's happening slower. They're a little bit up in arms because, oh my God, America now is playing field because the supports have been too generous. That's a bit ridiculous because the EU has always been talking about, they've been berating America for not. So I think you'll see companies like European Metals Holdings have been labeled strategic by the EU. So that's a hard rock deposit in the Czech Republic that's partnered with the Czech government. I think it's highly likely that gets permitted, into production. I think it's very undervalued and underappreciated, but I think earned, by cried wolf kind of mentality in Europe, just like show me the money. It's Jerry Maguire, show me the money time. But what more could be done is just further legislation in Europe and then permitting reform and just push back on, NIMBYism and other, it's just very difficult. So even the Department of Energy Loan Programs Office, they'll finance everything other than mining. They'll do the processing. So they'll actually finance concentrating spodumene, like 1% spodumene to 6%. They'll finance that, but they won't finance the digging of the ground to get the 1%. And that's not this huge cost element to it, but it still demonstrates a bias against mining. So if you had the bully pulpit, if you had Biden, with a hard hat in front of a mine site, instead of just solar panels, digging shovels, we need to support mining, then it would be pushed back again, then there would be permitting reform. So that needs to speed up. Will it? I don't know. We're going to have an election year, but so when you say what more needs to be done, just permitting reform.
All right. My last question for you today. Would you be able to share any key lessons maybe that you've learned this past year when it comes to investing in lithium, or any other final thoughts you want to leave our investor audience with today?
You interviewed me in 2019, and I coined the term velocitility, right? So this industry has ups, downs, but all the dips with good quality companies, good managements, buy the dips, and you will experience higher love. to quote Steve Winwood. So if something like, try not to buy things, at their all-time highs, okay? But if you own them and you didn't sell them when they were near those all-time highs, just have patience. I mean, long-term, like good companies, if it's Albemarle, it's Livent, right? They have a certain risk profile to them. If you've been burned by, if you bought a DLE speculation at the top, right, because you missed it, then like, I don't know what to tell you about those lessons. Just like, don't chase the next, hottest thing when it's kind of like at the top of the market. But there's a lot of new exploration stories. So if you could find a 10 million, 25 million market cap company like Lithium Americas was 14 years ago when we started working, or Piedmont Lithium 7 years ago when we started working with them, or Winsome Resources when we started working with them 18 months ago, we've represented these three companies and many others from very early stages. They've made discoveries. They're good quality companies. There's a little bit of luck to them, but a lesson to any retail investors like looking out there is just be careful who you trust and try to find good people who have proven track records, high integrity, who disclose. We disclose everything, right? Like in our newsletter, who we represent, and we eat our own cooking, right? So when we're talking about a company, we're typically invested in it, right? We might be advising the company, but you're never going to hear from us like a company, like us promoting a company that we're not already invested in. And I think you should ask that of like anybody. It's got to wonder if someone's touting something, like what's their interest? We disclose it. So I just continue. Like, I do believe we will have higher love going from Q4, Q1 of next year, barring some macroeconomic shock that we can't, forecast. The supply demand is strong. Lithium prices are going to be higher, and commodity equities follow commodity prices. So the stock prices have fallen in part because the spot lithium price fell. And that's important, like for equity market sentiment. It's not really important. It's not what the incumbent producers are necessarily selling for, but it's a sentiment indicator for sure. So that's a key lesson. Just follow the lithium carbonate spot price, and to get some sense of where sentiment is going to be.
Thanks so much for joining me today, Howard.
Priscilla, thank you as always for interviewing me.
Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.